Many agency owners think their agency is worth more than it actually is. And they usually don't find out until a buyer starts asking questions they can't answer. Because a deal doesn't fix a messy agency model, it exposes it. I'm Craig Cody, I'm a CPA, and we help marketing and PR agency owners keep more of what they make through better tax strategy, stronger cash flow, and smarter financial systems. Today, I want to talk about something most agency owners misunderstand completely. What actually makes an agency valuable? Not emotionally valuable, but financially valuable. Because the agencies that scale well operate cleanly and create options. Revenue does not equal value. One of the biggest mistakes agency owners make is assuming bigger revenue automatically means a more valuable agency. Because it does. Buyers care far more about agency gross income and profitability than top-line revenue. If your agency bills $5 million, but $3 million flows right back out to media spend, contractors, or pass-through costs, that's a very different business than an agency producing $2 million of clean AGI with strong margin. That distinction matters a lot. We see agency owners focusing on the vanity metric, gross revenue, total billings, headcount, awards, social proof. But buyers are going to look deeper. They want to know what revenue is recurring, what clients are profitable, what service lines actually make you money, and how predictable is your cash flow. Then, most importantly, what's left over after the dust settles. Because revenue is vanity, AGI is reality, and profit is the proof. And that's why knowing your numbers matters so much as an agency owner. Point 2 is owner dependency kills value. Here's another major problem. A lot of agencies are still built around the owner. The owner sells, the owner manages, the owner approves strategy, the owner solves problems, the owner puts out all the fires. At that point, the agency really isn't a business. It's a highly stressful job with payroll attached to it. And buyers see that risk immediately. If one person is carrying delivery, sales, and relationships, then the business becomes very difficult to transfer. And that's why agencies with stronger leadership teams, documented systems, and operational structure are usually more valuable. Not because they're bigger, but because they're more stable. And I've seen agency owners build successful companies financially, but the entire operation depends on them dragging it uphill every single month. And that creates exhaustion internally and risk externally. You want to build a company that can function without your constant involvement, even if you never plan to sell, because the same systems that increase valuation also improve your quality of life. Point 3, buyers look at your concentration risk. This is one that agency owners will often overlook. Client concentration is, say, 50 or 40% of your AGI, and even 20% comes from one client. That's risk, even if it's a great relationship, even if they've been with you for years, because buyers will immediately start asking what happens if that account leaves. Now, obviously your valuation will change, your leverage changes, and your stress level changes. The healthiest agencies usually have diversified revenue, predictable retainers, clear pricing models, strong utilization, and healthy margins across multiple clients. And that creates resilience. And resilience creates options. This also affects your cash flow forecasting. One large client delaying payment shouldn't create panic inside the business. If it does, the model probably doesn't work. Cash flow issues are usually operational signals long before they become financial emergencies. Quick question. What's the biggest operational risk that you see inside your agency right now? Is it client concentration, profitability, cash flow, or owner dependency? Drop it in the comments as I read them all. Point 4 is clean financials create leverage. And this is the part that many agency owners ignore until it's too late. Clean books matter. And they matter a lot. And I just don't mean tax returns being filed. I mean accurate reporting, proper agency gross income tracking or AGI tracking, correct classification of pass-through expenses, real visibility into the margins, and reliable forecasting. Too many agencies operate off incomplete financial information, or worse, they make decisions off of inflated revenue numbers that don't reflect actual profitability. Agency math matters. If your reporting isn't clean, you can't make good decisions. And those decisions are hiring decisions, pricing decisions, tax decisions, and growth decisions. And when buyers come in for diligence, messy financials immediately create doubt. And doubt lowers your valuation real fast. The agencies that create the most leverage are usually not the flashiest agencies. They're the agencies with predictable operations, strong cash flow, disciplined financial management, and clear visibility into performance. That's what sophisticated buyers will pay for. So here's the big takeaway. A valuable agency is not just a growing agency, it's a transferable agency. And that means strong AGI, healthy profit margins, low owner dependency, diversified revenue, predictable cash flow, and clean financials. Those are the things that create leverage. And if you never sell your agency, building this way will still matter because it gives you more control, better profitability, less stress, better decision making, and more options long term. If you want help understanding what's really driving or hurting your profitability inside your agency, we should talk. At Craig Cody & Company, we work specifically with marketing and PR agencies to improve cash flow, reduce tax exposure, and build stronger financial systems. All right, before you go, if you're an agency owner and you want to keep more of what you make, I've got two things for you. First, grab a copy of my book, The 12 Biggest Tax Mistakes That Cost Agency Owners Thousands. It breaks down the exact mistakes I see every day and how to avoid them. Second, if you want to see what this looks like for your business, get a free tax analysis. We'll take a look at what you're doing now and show you where you might be overpaying. And if this video helped you, make sure you subscribe so you don't miss future strategies on tax planning, cash flow, and building a more profitable agency. I'll see you in the next video.